Welcome back to the Deep Dive. Today we're going to try to look ahead, way ahead, to 2025
2025.
and figure out where global markets might be headed. Especially for our listeners who are trying to navigate, well, everything that's going on right now.
It's a lot to process, that's for sure.
It is. So to help us make sense of it all, we've got this super insightful interview. It's with Jae Yoon. He's the Chief Investment Officer over at New York Life Investment Management. And this interview is from the Global Money Talk YouTube channel.
Oh, I've seen that one.
Yeah.
He's got a really interesting way of, connecting macro trends with, specific assets.
Oh, he even brings in investor psychology, too.
He does, which is, I think, really important. Sometimes we forget about the human element in all of this.
Absolutely. So let's jump right in. Yoon's take on the U.S. market. Well, he's predicting a sideways movement for U.S. equities in 2025. So no crash, but no huge surge either.
He makes a good case for why this might happen. Even though the U.S. economy is looking pretty strong fundamentally, valuations, they're really high right now, especially in the large-cap tech sector.
Right. And if you remember that 2023 rally,
Oh, yeah.
well, the easy money from that, it might be over.
We might have to adjust our expectations a little bit.
Yeah, but it's not all doom and gloom, though, right?
Right.
Yoon points out, I thought this was interesting, that a lot of retail investors, they're so focused on those large-cap growth stocks.
Yeah, and that kind of concentrated interest, it could actually make the market even more volatile.
More volatile?
Yeah, like everyone's trying to squeeze through the exit at the same time.
Oh, okay, I see what you mean. So where should investors be looking then? Yoon is actually pretty bullish on U.S. mid-cap and value stocks,
Interesting.
especially in financials and industrials.
Okay, and I'm guessing that's because those sectors haven't seen the same kind of crazy growth, compared to tech. So they probably end a little bit more attractive right now, price-wise.
Yeah, exactly. And, he talks about how it's not always about just chasing the absolute highest return, but, finding those diamonds in the rough.
He does make a good point about how our psychology plays into all of this. There's this fear of missing out when it comes to large cap tech.
Oh, absolutely.
Because, those companies, they've been doing so well for so long.
For so long, yeah.
And that fear, it can drive up those valuations way beyond what's, reasonable.
Right. I also noticed that when he talks about smaller companies, he seems to prefer the S&P 600 over the Russell 2000.
Ah, yeah.
Can you just quickly explain the difference for our listeners who might not be familiar with those?
Sure. So they both track small cap companies, but the S&P 600, it has stricter rules, let's say,
Okay.
for which companies can be in it. So it tends to have, more established, more financially sound companies in there.
I see. And that's why Yoon prefers it, especially in what he calls a volatile late cycle environment.
Yeah, it's a more conservative approach, I'd say.
Definitely. And just so everyone's on the same page, what does he mean by a late cycle environment?
Basically, he's talking about those later stages, of economic expansion where growth starts to slow down and the markets, they tend to get a little bit more volatile.
So it's like the party's, winding down and people are starting to think about heading home.
Exactly.
Okay, now let's zoom out a bit, look beyond the U.S. and see what Yoon has to say about the global scene. He actually believes the U.S. dollar might be, well, nearing its peak.
Huh.
He points out that it's been incredibly strong lately.
Oh, yeah, super strong.
He calls it, U.S. exceptionalism, global uncertainty, people looking for a safe haven.
Right. Investors are looking for something stable.
Yeah. But historically speaking, the dollar is very high right now, so it kind of suggests it might be due for a correction.
That makes sense. What goes up?
Must come down, exactly. Now, for our listeners who are always on the lookout for those investment opportunities, what does this mean for them? Well, a weakening dollar can create some really interesting options overseas. It's like a seesaw.
A seesaw.
As the dollar goes down, other currencies and the assets priced in those currencies become, well, relatively more attractive.
Ah, okay, I get it. That's a good way to visualize it.
And this brings us to one of Yoon's more contrarian plays, China. He actually sees a potential turnaround there.
China?
Yeah.
That's bold.
It is. He's anticipating a potential turnaround fueled by government spending, what they call fiscal stimulus.
Right.
And he's really looking at the big picture here. He says that despite all the economic challenges China's facing, President Xi Jinping will eventually have to, well, deliver on his promises of economic growth.
He can't keep putting it off forever.
Right. But it is a bold prediction considering all the, headwinds China's up against.
He does acknowledge there could be some risks, some delays, but overall he sees China as a potential bright spot, especially as that U.S. dollar weakens.
It's a contrarian view for sure, one that we'll have to keep our eye on.
Absolutely.
Now, speaking of potential turnarounds, Jan is also surprisingly optimistic about Japan.
Japan.
Yeah, over the next 2 to 3 years.
Interesting. I wouldn't have guessed that. What's he seeing there?
He mentions a few things, actually. A potential interest rate hike by the Bank of Japan, which could make Japanese investments more appealing, more shareholder-friendly actions from Japanese corporations, and, of course, a weakening yen, which makes Japanese assets cheaper for foreign investors.
It's like a perfect storm of positive developments.
It is, but Japan still faces some serious long-term challenges, right?
Oh, absolutely. Jan knows all about the demographic headwinds Japan's facing. You know, the aging population, the low birth rate. Those problems, they're not going away anytime soon.
No, they're not. But it sounds like he sees a window of opportunity in the short term before those longer-term problems really start to bite.
That's what it seems like, yeah. And he thinks those who get in early could see some, significant gains.
Okay, so we've covered the U.S., China, Japan. What about Europe? What's the word on the street there?
Well, Yunin, he sees potential for what he calls a tactical pop in European equities.
A pop?
Yeah, he's basically saying that European stocks are kind of undervalued right now, because of the war in Ukraine and just the general economic uncertainty hanging over the region.
It's a lot of uncertainty.
It is, but he thinks that once some of those, those clouds start to clear, we could see a pretty rapid increase in valuations.
Oh, like a coiled spring.
Exactly, but there's a catch. Union also advises caution when it comes to those long-term strategic investments in Europe. He's more recommending a tactical approach, meaning, timing is key.
Okay, so if you're interested in Europe, it sounds like you're going to need to, do your homework.
For sure. And be ready to make some moves when the moment's right.
Now, before we move on to some of the other interesting areas that Jan talks about, things like inflation, commodities, interest rates, I want to pause for a second.
Okay.
Of all the markets we've just, kind of run through, which one stands out to you the most? Like, in terms of potential opportunity?
Ooh, that's a tough one. They all have, their own set of risks and rewards.
I know, right? It's a lot to think about. But that's what makes this whole thing so fascinating.
It really is, and that's what makes Jan's insights so, valuable. He doesn't just tell us what to think. He gives us those tools, those frameworks, so we can kind of figure it out for ourselves.
Well said. Okay, let's dive back in and see what else Jan has to share. He's got some really interesting thoughts on inflation and how it could affect commodities and interest rates.
Sounds good. I'm all ears. So he anticipates a gradual rise in inflation. Not a spike, but, like a steady climb.
Okay.
And this is where it gets really interesting. It could impact both commodities and interest rates.
Oh, I see.
And he points to, a bunch of potential drivers, one of them being the impact of U.S. fiscal policies.
Fiscal policies.
Things like tariffs and tax cuts, things that, could put upward pressure on prices.
Yeah, it's all connected. But what really caught my attention was Jon's predictions for specific commodities.
Oh, yeah? What's he saying?
He's bullish on natural gas, but he's a little less certain about oil, and then he's actually quite positive on metals and agriculture, mostly because of that potential demand coming from China.
Right, right. It highlights how interconnected everything is. What happens in China, even their internal policies, it can impact commodity prices all over the world.
It's like a butterfly effect, but with soybeans and steel.
Exactly.
And then, of course, there's the interest rate question. Yoon expects rates to rise, potentially even reaching as high as 6% for 10-year bond yields. But he does say, don't assume it'll be a straight line. Interest rates rarely move in a smooth, predictable way.
And those sharp increases, those can really hurt economic growth.
Right. It's a balancing act for central banks.
It really is, trying to control inflation without, killing the economy at the same time.
So, yeah, buckle up, everybody. Sounds like it could be a bit of a bumpy ride.
For sure.
But here's another interesting point that Yon makes. He acknowledges that those pro-growth policies in the U.S., they could actually benefit the economy.
Okay.
But, and this is important, he's a little worried about the potential negative consequences of, those America First policies, especially tariffs.
Right.
Because he thinks they could, mess up global trade and ultimately hurt U.S. corporate earnings.
It's a double-edged sword, right?
It is.
Policies that are designed to help the U.S. economy, could actually backfire if they damage that global system that we're all a part of.
Precisely. And it just shows how important it is for, policymakers to really think about those broader global implications of their actions.
It really is like a game of chess. Every move has these ripple effects across the whole board. You can't just focus on your own pieces.
Exactly. You got to think about how your opponent is going to react, think several moves ahead.
For sure.
And this kind of leads into another long-term risk that Yen flags, which is that growing U.S. fiscal deficit.
Right. That's been a concern for a while.
It has. And while it might not be like an immediate threat to the markets, he warns that eventually it could lead to, even higher interest rates, even more volatility in equities.
Just like, ignoring a slow leap in your tire. Eventually, you got to deal with it.
And it's probably not going to be pretty.
No, it's not.
Nobody wants to be stuck on the side of the road with a flat tire, especially when there's, so much uncertainty already.
Exactly. So this is definitely something to keep in mind, even as we, focus on those short-term moves in the market.
It's all about finding that balance, the immediate versus the long term.
Exactly.
And speaking of those long-term trends, we got to talk about the elephant in the room, or maybe the Bitcoin and the blockchain.
Right.
It's definitely a hot topic these days.
It is. So what's Yen's take on, all the talk about institutional adoption of Bitcoin?
So he acknowledges that there's, growing interest from institutional investors.
Yeah.
But he thinks that widespread adoption is still a ways off. The biggest barrier, according to him, is volatility.
Oh, of course.
Bitcoin's price swings, they're just too wild for a lot of those institutional investors who are used to more stable, predictable assets.
Yeah, it makes sense. It's tough to justify putting, big chunks of money into something that can go up and down, like a roller coaster.
It's definitely a watch this space situation. Bitcoin's future as a truly investable asset class, well, it really depends on, whether it can stabilize and gain that broader acceptance from, Wall Street.
Those big players.
Exactly. And it's not just about the technology itself. It's about how, the whole financial ecosystem adapts and incorporates it.
Interesting. It's a whole new world out there.
It is. Okay, so let's do a quick recap. We've talked about the potential for that sideways movement in U.S. equities. We've touched on the appeal of those mid-caps and value stock, and we've even explored those contrarian plays in China and a possible, comeback for Japan.
Right. We've covered a lot.
We have. We've also dug into, how the dollar, inflation, commodities, interest rates, they all kind of play together. And we even touched on those, those long-term risks, the U.S. fiscal deficit, the future of Bitcoin.
A lot to digest. But I think that's what we do here on the Deep Dive. We take all that information and we try to break it down into those key insights that our listeners really need.
Absolutely. And I think, Yon's perspective is it's a really valuable way of thinking about, where to invest in 2025.
I agree. He's not afraid to get into the weeds, but he presents everything in a way that, that just makes sense.
Yeah, and he doesn't pretend to, have all the answers. He's just sharing his best insights based on his experience and, his analysis.
Exactly. And that makes him such a credible voice.
So what are those, key takeaways? What should our listeners be thinking about as they plan their investment strategy for 2025?
Well, I think the biggest takeaway is that diversification it's more important now than ever. Don't put all your eggs in one basket. Spread your investments across different assets, different regions, different styles.
Great advice. And I think that ties in with what we were talking about earlier, that potential sideways market in the U.S. If those, large cap growth stocks aren't going to be those guaranteed winners anymore, investors got to look elsewhere.
Absolutely. And Young's given us some great starting points. Mid-caps, value stocks, those contrarian plays in China and Europe, there's definitely potential there.
There is, but it's important to remember, every investment comes with risk. There are no guarantees.
Nope, none at all. That's why it's so important to, do your research, figure out how much risk you're comfortable with, and then invest accordingly.
It's not just about chasing returns.
Yeah.
It's about building a portfolio that that actually matches your goals and your comfort level.
Exactly. And if you're not sure where to start, or if you just want a second opinion, talking to a financial advisor is never a bad idea.
Great point. Having an expert in your corner can make a big difference, especially when you're navigating, these complicated markets.
It can be overwhelming, for sure.
It can be. Now, before we wrap things up completely, I wanted to touch on one more thing that Yun emphasizes, which is, staying informed and adaptable, especially given all this uncertainty.
Oh, yeah, that's crucial. Things are changing so fast these days, and the markets, they're reflecting that.
Absolutely. What worked yesterday might not work tomorrow.
That's why you got to stay on top of, global trends, what's happening in the economy, technological advancements. The more you know, the better decisions you'll make.
Knowledge is power.
That's right. And, to all our listeners out there, keep learning, keep asking questions. The more you understand the markets, the more confident you'll be.
Well said. And remember, you don't have to do this alone. There are resources, to help you along the way.
Absolutely. Financial advisors, online resources, even podcasts like ours. There's a ton of information out there.
There is. It's all about, supporting you on your investment journey.
It's a journey, that's for sure.
It is a journey. And, we're all on it together. It can be a little intimidating, especially with so much information, so many opinions out there.
Yeah, it can be tough to sort through it all. That's why, having a good framework is so important. And I think Yon really gives us that. He helps us, cut through the noise and focus on what matters.
Absolutely. So to bring it all together, what's that one big takeaway for our listener who's trying to find those best opportunities in 2025?
Well, I think, the theme here is cautious optimism.
Cautious optimism?
Yeah, the global economy, it's facing some headwinds, but, there are still those pockets of opportunity. It's not about being, super bullish or bearish.
Right.
It's about being strategic.
Being smart about it.
Exactly.
It's about finding those hidden gems, right?
The ones everyone else is overlooking.
Yeah, and a lot of that, it comes down to, understanding, investor psychology.
Oh, absolutely. Jan makes a great point about that, how we, as investors, we tend to overreact.
To everything.
To both good news and bad news. And that's why we see those booms and busts.
So the key is, don't get caught up in the hype.
Right. Don't just follow the crowd. Think for yourself. Be ready to, to go against the grain sometimes.
I like that. And remember, investing, it's a long game.
It is.
Don't get, discouraged by those short-term ups and downs. Stay focused on your goals and keep learning, keep adapting.
The market's always changing. You got to change with it.
So where do we go from here? What's the next step for our listener who, wants to put all this into action?
Well, I think the first thing is to take a look at your portfolio, your current portfolio.
Okay.
Does it align with Yunan's outlook for 2025?
Right.
Are you too exposed to certain sectors, certain regions that might be struggling? Or are you missing out on those potential opportunities, like in mid-caps, value stocks, international markets?
That's a great place to start. And if you're not sure, or if you just want, someone to bounce ideas off of, talking to a financial advisor is always a good idea.
Definitely. They can help you, build a plan that works for you, one that takes into account your risk tolerance, your goals, your specific situation.
Absolutely. And remember, the best investment you can make, it's in yourself. Keep learning, keep asking questions, and keep challenging your own assumptions.
The more you know, the better equipped you'll be to make those smart decisions.
So to wrap things up, we've covered a lot today.
We have.
We explored Jae-yoon's insights on the U.S. market, those global trends, investor psychology. We even touched on Bitcoin.
A little bit of everything.
We talked about diversification, staying informed, being adaptable.
It's all connected.
And of course, thinking critically and getting advice when you need it.
Always good to have a second set of eyes.
Hopefully this deep dive has, given everyone a better sense of, where the markets might be going in 2025.
And how to prepare.
Exactly. And, we encourage everyone to keep digging into these topics. Stay curious.
The world is changing fast.
It is. And the more you learn, the more empowered you are to make those informed decisions about your financial future.
That's what it's all about.
So with that, we're going to wrap up this deep dive.
Thanks for joining us, everyone.
And we'll see you next time. A CERE.